I'm going to declare the recess over and the meeting back in session. And in this part of the meeting, we're going to have a work session that's giving us some additional information on what the implications are of either going to a city income tax or potentially raising the millage rate. Ms. Grinzinger, do you want to give us any more information?
Mrs. Ridley is ready, and I guess what I would just remind everyone about is that you have been talking about this structural gap between revenue and expenditures for several years. Now, we have taken several steps and instituted several measures beginning in 2005, actually, the most dramatic of which was when we cut nearly $1 million in services and spending that took effect in the 2010-2011 budget years. And because the state's removal of state shared revenue does not seem to be increasing, and because property values cannot rebound as quickly under Proposal A, we are still left with that kind of a gap. So the Commission has begun talking about how to close that gap. They've contracted for an income tax study as one of the research components to take a look at. We'd now like to summarize the information that you've been looking at for the last several months.
Okay, thank you. Ms. Ridley.
What I'm going to do is take off a little bit from where we were 2 weeks ago, talk briefly about some of the assumptions on revenue that were in the income tax study that was done by Municipal Analytics, give you some updated illustrations, give you some generalization on impacts, and then we've calculated 5 specific examples for fictitious homeowners that will show the potential impact on those individuals, and then we'll show you the individual calculator that we'll be able to make available. So as we talked about 2 weeks ago, the study assumed an increase in revenue need of $1 million, which was made up of basically those 3 components. And that study told us that if we implemented an income tax but wanted to generate $1 million in revenue, we could still reduce the millage rate by almost 3.2 mils. So what we were talking about 2 weeks ago and a little bit during your special meeting is what is our updated revenue assumption of what we need. And unfortunately, there's a wide range of what that need could be. We do know there's a gap between revenues and expenses this year of $200,000 that will continue. We know that a number of you have an interest in getting the capital improvement millage back up to 2 mils, which removes $200,000 from operations or requires a $0.5 mil increase. And then we also talked about if expenditures go up 1%, but our taxable values go up 1%, there's still a $40,000 gap that continues to grow if that's our rate of growth. We talked about the fact that personal property loss is unknown, but it could be anywhere from $120,000 to $600,000. And then we talked about the fact that the Economic Vitality Incentive Program, the requirements for that are subject to legislative action each year. And even though we've met it the last 2 years, we're never sure what the requirements for the following year are going to be. So the impact on us, if we continue to meet them, is 0. But if there's some pieces of them that we cannot meet, it could be as high as $600,000. I don't think we'll ever be to that point. I think we'll always be able to meet some pieces of them. So the range could be anywhere from $200,000 to, if you added up all those worst case scenarios, to $1.7 million, which we know is never going to happen. But what we talked about during the special meeting was that we need to pick something so that people can at least do some analysis and begin to give us some feedback. So the assumption I'm using tonight for all of these calculations is based on an assumption of making up $600,000 of revenue. And the way I got to that number is the $200,000 current gap, the $200,000 to get the capital improvement millage back to 2 mils. I rounded off personal property to $100,000 just so I had some round numbers to work with. And then I threw a miscellaneous other in there for another $100,000. to get us to a round number of 600,000. Again, it's just an illustrative number. It's not cast in stone. There's a number of things that can impact it, but at least it gives us something to compare to. So, if we did an income tax at 1% for residents and 0.5% for non-residents with a $1,000 exemption, which is what the whole study was based on, we could do that, and to still generate the $600,000 in additional revenue, we could still reduce the millage rate by 4.3 mils. The study had us reducing it at 3.2 mils, so this is a greater reduction than what the study shows. If instead we decided to make up that $600,000 in revenue from a millage increase only, that would take a millage increase of 1.5 mils. So every scenario I do for you shows those two options for you for the 5 fictitious people. Again, it's an illustrative number. I'm being repetitive. I apologize for that. So the first thing we did is we revised Table 5, which was page 7 in the study that the consultant did, and we redid all the numbers in this table based on a millage decrease of 4.3 mils. And I had told you 2 weeks ago that as we did that imaginary line between the red numbers, which is where people save money, and the black numbers, which is where it costs people more money, that line would move to the right. And this shows you it did move to the right somewhat, so it's closer to the middle of the graph, but not quite there. We then took the generalities of what we know. We know that even under this scenario, businesses are going to pay less. No matter what our millage reduction is under the income tax scenario, most businesses, as a general rule, will pay less. Doesn't mean every business will, certainly, but as a tax-paying unit, they will generally pay less. We also know that senior citizens or people whose primary source of income is pension will pay less, because pensions and Social Security do not pay an income tax. So as a general rule, that class of taxpayers will pay less. We believe in all cases renters will pay more unless our landlords reduce their rental rates. Then obviously that doesn't necessarily hold true, but assuming rental rates stay the same, even if we reduce the property tax millage, renters would pay more because they don't save on the property tax reduction, but yet they have to start paying an income tax. As you see from that other chart that was just up there, the higher income people almost always pay more under an income tax scenario, even with the millage reduction. And there's a bunch of us in the middle that it really depends on our personal situation about whether we pay more or less under which scenario. So the first example we did was for a renter, a fictitious renter, who obviously has a taxable value of 0, and we just assumed an income of $10,000. You'll see I use real round numbers in every one of these examples because it's easier to calculate. And the way each of these next 5 charts is set up is the first column shows you what that person is paying under the current 15.75 mils, which is the total city millage rate. The second column will show you what they would pay if we increased the millage by 1.5 mils. And then the third column will show you what they would pay if we implemented an income tax and reduced the millage rate by 4.3 mils. So this fictitious renter, the only change to them we're assuming is that they would start to pay an income tax under the last scenario, and their income tax would be about $90. So their change from what they're currently paying today is $90 more.
Could I ask, I know you probably want the questions at the end, but just for clarification as we go through these, that income of $10,000, is that the taxable income, what they be paying their federal income tax on?
Yeah, I'm assuming it's their adjusted gross income, which is the number that feeds into it, yes.
Okay,
So that's after deductions and so forth.
thanks.
And all of these next ones are set up exactly the same way. But my second example is the typical senior citizen whose almost all of their income comes from a pension or from Social Security. So in this situation, this senior citizen has a taxable value house of $50,000, has pension or Social Security income of $60,000. So under the current scenario, this person pays $788 in property taxes. Under the 1.5 mil increase, they would pay $75 more, or $863. And if we went to the income tax scenario with the millage decrease, they would actually save $215. Again, that assumes all of their income is from pension, which probably isn't always the case, but I was just trying to keep them simple. The third example is a higher income individual who has a taxable value home of $100,000 and income of $100,000. In this scenario, under the millage increase, this person pays $150 more per year, but under the income tax with the millage decrease, they pay $540 per year. And this next example is one of those people in the middle, and this is someone with a taxable value of $50,000, income of $60,000. You see under the millage increase, they pay $75 more per year. Under the income tax and millage decrease, they pay $355 more per year. And then my last fictitious example, and this one takes a little bit more stretch of the imagination, but this is a person who has a higher value home, probably because they bought kind of at the peak of the market. And the assumption is that since the time they bought that home, maybe one of the income earners has lost their job. And so their income is in the $50,000 range. And so under this scenario, the millage increase, they obviously pay $180 more. Under the income tax and the millage decrease, they save $46. Now, certainly, I don't know if anyone in our community fits exactly into any of these 5 scenarios, but they were shown to give you a feel for how the different things impact them. But really, what's most important is this calculator that we'll launch on our website in the next couple days. And I've revised this calculator so that an individual can go in and fill in the green boxes on this with their own personal information. And what the yellow boxes will calculate for them is what the savings or cost would be under the income tax scenario with a 4.3 mil reduction. And the blue boxes will show them what the impact would be with a 1.5 millage increase. And this chart, or this calculator, looks a little different than the one you saw 2 weeks ago, because I put our full millage rate in here. I put the full 15.75 mils as the base. In the income tax study, he just keyed on our operating millage, and I was afraid that would be confusing to taxpayers, because if they looked at their tax bill and looked at this, the numbers weren't going to jive. So I adjusted everything so our base was our total millage rate, because we have a couple of millages that are dedicated to certain things which would still be in place even under an income tax scenario. So it looks a little different than 2 weeks ago, but I think it would be more realistic for people to understand if they compared it to documents they already have. So we'll have this available on our website, and people, residents or non-residents, can fill in the green boxes, and it calculates the impact for them. Obviously, with non-residents, they don't have a taxable value that's impacted, but it would still give them a feel for what their income tax bill might be. And as I indicated 2 weeks ago, all of those green boxes are items they can get off their federal tax return that they either may have done already or may be working on in the next couple of weeks. So we'll make that available for people to use. So our next steps, as I indicated, is we'll have that on the web in the next couple days, and then you've scheduled the public input session in 2 weeks so that you can hear from people to know some of the impacts to individuals in our community. And so that is all I have for you this evening.
Yes, Commissioner Jocelyn.
Couple questions. So that $600,000 that you put in the beginning, that was just an assumption, right?
You got that. Thank you for listening so well.
I wanted to make sure.
I sometimes wonder if you listen, so I appreciate that.
Subtracting pensions out of adjusted gross income. It's taxable on the federal level. Is it because the state subtracts it that we have to also subtract it as a city, or do we have that option?
I don't know the answer to that, but I can find out.
Okay.
because that's how all, the study was based on that whole assumption, so I
Well,
don't know.
the state automatically allows you to subtract pensions and social security,
Yeah.
but it's in your adjusted gross income, and if we start that as a base,
Yeah,
I'm just curious.
let me check in if that's an option or if it's just a given.
Okay.
Good question. Any other questions? Commissioner Routman?
Just a point of clarification for the folks that go out there to the website and fill in information in the green boxes. That's just a worksheet for their use. No data is being collected, correct?
Oh, that is certainly correct. We're not capturing anything from that data at all.
Okay, I just wanted to make sure everyone was clear on that.
Yes, thank you for bringing that up.
Good clarification. Commissioner Holton?
Other revenues in this scenario, dividend income, interest income, they win the lotto, are those subject to the income tax?
Yes, they are.
All of those? Okay. Thank you.
Other questions? Commissioner Seuss?
So something I'm thinking about when you talk about renters, I don't know if this is a statistic we pay attention to, but do you know if there's any correlation when the property tax increases that rent rates go up? I mean,
It's been so long since we've increased our property taxes, it's hard to answer that. I don't know if there's a direct correlation to that or not. I think the market probably drives a good portion of that, but certainly our landlords are good businessmen, and I'm sure they look at their expenses as well. I have nothing to prove one way or the other whether they go up or down based on that, though.
that would be, I mean, if there's a correlation there, then, you know, then we're looking at renters paying more either way. So that's something.
Well, I'm sure that they would lower it if their property tax went down, they would collect less rent. I'm sure they would be generous and.
I'm hopeful that that's the case.
Any other comments, questions? It was extremely helpful. I really appreciate the fact that you decided to do the 15.75, because that was one of the, as I was looking at the material, there were places where I was wondering why it was, a different figure was being used. So I think that will definitely clarify it. In addition to the calculator being online, although I'm sure everybody would be thrilled to watch the entire meeting, is it possible for us, and maybe the answer is no, but is it possible for us to just put this work session also on the front page of the website like the other income tax presentation? So that
Yes.
if people wanted to hear the explanation, they could do that?
And people can get to the first income tax study work session, by the way, on the front page, in the section that says for residents, there's a little statement you can click on that says income tax presentation. It'll take you to the YouTube video of the first study. We can add this so that someone can be regaled with multiple income tax presentations if they would like.
And my guess is, even though obviously the information in the first presentation was important to us, for the average person who is trying to figure out how this is going to impact them, this 10-minute presentation is probably what they're looking for. I think it would, I really appreciate the information, and I think it's the thing that will be the most helpful to residents.
Yeah, as a matter of fact, while you're talking, I pulled up the main
Oh,
page
good,
of our
good.
website, and you can see right under city updates even, the third item under there is the income tax study results. That was the original presentation. That's where we'll also post the clip of tonight's meeting, and we'll post the calculator there as well. So it will be right on the main page.
And I think it's safe to say that all of us honestly are hoping that people will do that, and that when we have the public hearing on March 11th, that people will let us know what they think, because we have very mixed feelings about it. I think we really are looking at how people think it will impact them. So this is helpful to us, and input from the public will be equally helpful to us. So, any other comments? Well, thank you very much, Ms. Ridley. That was extremely helpful. If there are no other comments, I'm going to recess this meeting, and we're going to move into closed session.